This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices $2 a barrel on Friday because of jitters about a possible increase in production by OPEC and its allies, while a weaker than expected U.S. jobs report fed worries about demand. Brent crude futures settled at $69.67 a barrel, down $2.03, or 2.83%. U.S. West Texas Intermediate crude finished at $67.33 a barrel, down $1.93, or 2.79%. Brent finished the week with a gain near 6%, while WTI rose 6.29%. Three people familiar with discussions among OPEC members and allied producers said the group may reach an agreement as early as Sunday to boost production by 548,000 barrels per day in September.
At least two vessels loaded with Russian oil bound for refiners in India have diverted to other destinations following new U.S. sanctions, trade sources said, and LSEG trade flows showed. The U.S. Treasury Department this week imposed sanctions on more than 115 Iran-linked individuals, entities, and ships, some of which are involved in transporting Russian oil. U.S. President Donald Trump has urged countries to halt purchases of oil from Moscow, threatening 100% tariffs unless Russia agrees to a significant peace deal with Ukraine.
Moving on to the top news in the energy sector.
Indian state refiners have stopped buying Russian oil in the past week as discounts narrowed this month, and U.S. President Donald Trump warned countries not to purchase oil from Moscow, industry sources said. India, the world's third-largest oil importer, is the biggest buyer of seaborne Russian crude, a vital revenue earner for Russia as it wages war in Ukraine for a fourth year. The country's state refiners, Indian Oil Corp., Hindustan Petroleum Corp., Bharat Petroleum Corp. And Mangalore Refinery Petrochemical Limited, have not sought Russian crude in the past week or so, four sources familiar with the refiners' purchase plans told Reuters.
U.S. crude oil production rose to a record 13.49 million barrels per day in May, even as oversupply concerns pushed prices for the commodity to four-year lows, data from the U.S. Energy Information Administration showed on Thursday. U.S. President Donald Trump has repeatedly called for higher oil production from the country, where output was already at record levels in each of the past 2 years, and has taken steps to speed up and expand drilling on federal lands. At the same time, producers who are part of the OPEC Plus group have also accelerated output hikes since May, partly to win back market share from U.S. shale drillers, leading some analysts to warn that the market is likely to be oversupplied this year. Next, we have the top news in metal markets. Gold prices rose almost 2%, hitting a one-week high, on Friday after weaker than expected U.S. payrolls data boosted Federal Reserve rate cut expectations and fresh tariff announcements spurred safe haven demand. Spot gold reached its highest level since July 25, adding 1.8% to $3,347.66 per ounce as of 0148 p.m. ET, 1748 Greenwich Mean Time, after rising as much as 2% earlier today. Bullion was up 0.4% during the week. U.S. gold futures settled 1.5% higher at $3,399.80.
China's refined copper output is set to hit a record high in 2025, analysts say, as its giant smelting sector powers through a global shortage of copper ore that is forcing some overseas competitors out of business. Refined copper production in China, which already accounts for more than half of the world's output of the metal, will climb between 7.5% and 12% this year and surpass last year's record high of 13.64 million metric tons, according to estimates from 5 analysts. Copper is vital for power, construction and manufacturing, and growing output in the world's top producer and consumer is sucking in scarce copper concentrate, the main ingredient for smelters, increasing pressure on struggling competitors and cementing China's dominance over the industry.
We will now look at the top news in the agricultural sector.
Chicago Board of Trade soybean futures finished flat on Friday but notched a second consecutive weekly decline as ample global supplies, Favorable US weather and weak Chinese demand hung over the market. US farmers were expected to harvest bumper soybean and corn crops this autumn following non-threatening weather conditions. At the same time, they worried that President Donald Trump's latest wave of tariffs may hurt American farm exports at a time when soy and wheat sales have struggled. The United States faces stiff competition for global soy sales from Brazil, the world's biggest exporter of the oilseed.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.